For investors who are actively flipping houses in today's market, it has now become a more significant challenge than ever before, according to ATTOM Data. House flipping returns have tightened considerably, and the return on investment, or ROI, is averaging approximately 25%. Meanwhile, gross profits are hovering just around $65,000 on average per deal. Rising borrowing costs, elevated home prices, and escalating material expenses have all combined to create some of the slimmest profit margins that investors have seen in years. So luckily for all of us, today's conversation comes at a timely intersection because flipping houses can be one of the most lucrative methods to earn a sustainable income if you know what you're doing. Thus, I'm pleased to tell you that this week I had the privilege of sitting down with my friend Jason Roberts. Because at the end of the day, it comes down to more than just navigating a market and finding undervalued properties. It demands disciplined systems, market expertise, and strategic and viable investment strategies. That's where Roberts comes in. He understands what it takes to succeed in today's modern real estate market. He is the founder of Better Blueprint Realty, which is a vertically integrated real estate investment platform. He helps everyday investors access the same value add opportunities which are traditionally reserved for institutional capital. Over the course of his career, Roberts has helped to execute more than $250 million in real estate transactions, spanning fix and flips, short-term rentals, multifamily properties, and luxury developments. During his first 2 years as an investor alone, he acquired more than 200 properties, developing a reliable system for acquisitions, renovations, and profitable exits. Real estate has been incorporated and infused into Jason's blood from the very beginning. Raised as the son of a builder and real estate agent, he combined that foundation with entrepreneurial drive, transforming a $5,000 personal investment into $400,000 in cash and equity within the first 18 months of his career. What truly distinguishes Jason is his ability to analyze and assess data-driven analysis from an investment standpoint, combined with creative storytelling and creative thinking and brand building expertise. Through his brokerage, wholesaling operation, and membership platform, he teaches investors how to build sustainable wealth without the hype, manage the risk in this changing environment and market conditions, and approach real estate investing with the discipline and professionalism of a seasoned investor rather than a hobbyist. And Roberts joined me this week to tell me more. I'm Kevin McShann, and let's have this conversation. And if you're ready, I'll take a moment to welcome you to the program. And I'm super excited to learn about how you're making a difference in the world of real estate. It's great to see you, my friend, and happy Thursday to you.
Let's do it.
Absolutely. So, Jason, I wanted to start our conversation by asking about your origin in real estate, how you got started, because I know that it was infused in your blood at an early age, my friend. So, tell me, why is real estate your passion and purpose, my friend?
Yeah, real estate actually was not something that I ever intended to get into or really wanted to get into. I did grow up with my parents in real estate. My dad was a new construction builder. My mother was an agent. I went to school for engineering, completely, different path in general. But real estate was always kind of in the back of my mind. It was always familiar to me. I had started to get make some decent money and got a job as an engineer in town in Colorado, and was always looking towards how do we become an investor? How do we make money work for ourselves? How do we not retire when we're 75 years old? How do we have some real freedom and ownership over the skill set in our lives that will allow us to have some flexibility? And so we started looking at all sorts of options, like from an investment perspective, like gold, crypto, mutual funds, anything, right? And real estate really stood out to me because it's really well known. It's really easy to sell people on raising money for something like this. And when we looked at fix and flips, when we analyzed it, it was like we can make 80K, 120K in 4 months, and we don't have to use any of our own money. Like that was by far and away in a different league compared to any other investment vehicle where you're going to spend 30 years building your mutual fund portfolio versus being able to really actually make a difference in your cash position very quickly from that investment side in real estate.
Yeah, absolutely. And Jason, just before I ask you about Better Blueprint Realty, my friend, I wanted to ask you about your perspective on the state of real estate and whether you think home ownership is becoming more affordable and your thoughts on how more people can really enter the realm of real estate and home affordability because it's a big topic of conversation. So I'm curious to get your thoughts on the matter, my friend.
Yeah, I think, real estate by nature is becoming more and more and more and more expensive. Like we just have inflation helps real estate, right? And so when we talk about do we want to invest in real estate? Yeah, the people that own real estate love inflation because your home prices are going to go up significantly. It's a massive bump for us when we talk about appreciation in these properties and building equity. But then those that have not purchased, it creates this big hurdle of how do I then get my first property under contract and buy a primary residence. And that's what most people struggle with, right? Is buying that primary. Real estate right now has been pretty flat. It is not what it's been in 2019, 2020, 21. Really, from 2010 until 2021, anybody could have made money flipping homes or, holding homes in that realm. And now you have to be a lot more strategic and skilled to do well in this space. I don't see real estate becoming more affordable. Like I think that we're taking good measures as we talk about the administration, banning institutional investors and those sorts of things. I think these are all necessary steps because of, the unaffordability, but ultimately it's income versus, home prices, and we're just not seeing it. And for homes to be affordable, the rates need to be at 3 or 4%, and that's just not the case right now. And historically, that's not been the case over the last 30, 40, 50 years. So it's going to continue to bifurcate. It's going to continue to get more extreme, I would think, in terms of harder for new individuals to get into real estate, but more profitable for those that have been able to figure out strategically how to make it happen. So I think that's where we live right now, is then how do we make it really accessible for individuals to where they can start putting this strategy to work for themselves.
Yeah, absolutely. Now, you are the founder of a company called Better Blueprint Realty, my friend, which is a vertically integrated real estate investment platform that gives everyday investors the access to more value add opportunities that are traditionally reserved for traditional investors. So tell me about your company and what makes it so fabulous, my friend.
Yeah, I think the fun part for me about this business is it focuses on a non-traditional segment of real estate, right? Everybody is looking at traditional buying and selling and being an agent and how do I scale up a traditional brokerage as quickly and as large as possible. Real is a brokerage that is, emerging with AI technology, but it's the same business model, right? Like it's you're a brokerage, you make very, very low margins, and it's all about volume. And that's just not how we're set up. Like we're vertically integrated amongst four different income streams in the real estate space. But what's fun is like we're taking what's traditionally extremely low margin business and turning it into an extremely high margin business and creating a lot more opportunity through these outlets, right? So we've created an entire ecosystem that helps benefit the agents that join us, and the investors that want to be a part of this ecosystem as well. So briefly, we own a real estate brokerage, and that's focused on investment fix and flips or investment real estate in general, as well as luxury homes. And our agents have 5 methods of income through that brokerage, not just one through the traditional brokerage. We fix and flip about 20 properties a year ourselves, and we average about 120K of net profit per deal that we do. So the fix and flip model has been extremely powerful for us, and that's really what our business was predicated off of, right? We did that for a few years, had really massive success, realized that this was not overly complicated. You don't need to have a software degree or, be Elon Musk to understand what this looks like and how to be successful in this. You just need good systems and people that have done it before to really help you get started. And so we built a mentorship program off of that, right? Teaching people how to get access to this information, our tools, our systems, how to manage properties and projects, how to raise money, all of those different things. Really been a fun process to see a lot of people quit their jobs and make multiple 6 figures a year. That's been a really big blessing to watch that transform some people's lives. And then we built a wholesale business to find these off-market distressed properties as well. And that really serves as like the deal flow for all of these other businesses, right? That feeds the rest of the machine here. And as you can imagine, if we're the ones finding the properties, listing the properties on the back end, helping people, grow in their mentorship and understand how to do these types of projects, but then also fix and flipping ourselves, all these margins stack together to create a much more scalable, robust business than like a typical brokerage.
Yeah, absolutely. And you bring up the whole concept of mentorship, and I know that you've been involved in more than $250 million in real estate transactions, ranging from everything from fix and flips and short-term rentals to multi-family properties and luxury development. So I'm curious from a mentorship standpoint, Jason, I'm curious to ask you, what do you think has been the biggest evolvement, or how do you think your mentorship process or priorities have changed to meet the modern needs of today's real estate market and to make sure that investors you bring on are successful? What are your thoughts there, my friend?
I think it's a great question, right? And the way that we started initially was building custom real estate strategies to help people evolve over 1 to 5, 10 years, right? Because you shouldn't stay in the same strategy long term. We look at this as like buckets where, maybe you have a primary residence bucket, a primary residence starter bucket. Then you have like a cash generation bucket, which is still time for dollars, but it can be a very efficient time for dollars mechanism. The first year that we fix and flipped, we were making 400 grand a year, and that was without any of our systems in place, right? So you can change your cash position very quickly to then go out and do these passive investment mechanisms where you're generating cash flow in a different mechanism, such as long-term multifamily rentals, etc. So we started out building custom strategies, understanding that there are 30 different strategies out there. It is super easy to get shiny object syndrome and jump from one to the other, but one or two are really going to work the best in your local market, and with your skill set and how hands-on or how hands-off you want to be. So understanding all those things really gives us a very good picture to say, hey, listen, what's working now? What's going to work when the market shifts? The economics of long-term rentals and multifamily has changed dramatically over the last 3, 4, 5 years, to where in a lot of cases it doesn't make economical sense to go pick up a 200-unit apartment complex or single-family long-term rentals. But it always makes sense to fix and flip. The question then becomes, when the market shifts, how do you create systems that no matter what happens in the market, you can continue to purchase properties and you can continue to fix and flip? And so, for example, in 2022, there was a massive market shift, at least here in Colorado. We saw rates go from 2.5% to 7.5%. We lost about 15% to home value in about 8 months. So what are we doing in that situation when you're losing 150, 120K worth of home value in that period of time where you might be flipping a home to still be profitable, right? And it doesn't mean you abandon the strategy altogether. It just means now we got to double down and understand that our buying criteria has to change. We have to buy more conservatively. We have to look at comps differently. And so that's what changed for us. Our buy box changed. The evaluation criteria changed. We said, hey, we have to build out a worst case scenario model to where if the market is shifting at this rate and we're losing value, if our construction goes over budget, if we go longer in terms of holding the project longer with delays, what does that all add up to in a worst case scenario? And if that all happens at the same time, can we still be profitable, right? So we've taken the practical approach of just building in our worst case scenarios, continuing to buy. That does mean that we have to find deals at a steeper discount. And that means maybe more sales skill, and maybe a little bit more skill development on that side. It's not as easy to find deals as it once was. But you can flip in any market. You just have to be, ready to make that shift.
Yeah, absolutely. And, just enjoying your first 2 years in this field, you dove right in, because I know that you acquired more than 200 properties, my friend, and we've already talked about your business model. So I'm curious about asking you, how do you think you've grown as a real estate agent, a business owner, and what do you think is the biggest lesson you've learned about real estate now that you didn't know before?
Yeah, great question. We did scale quickly, mainly because this strategy is systems based. And so if you can raise the money, then there's not really a reason why you couldn't scale to 10, 20, 30, 40 a year, so long as you have good contractors and good systems to kind of follow this process. But to answer your question in terms of what have we learned about real estate in general, we've seen a lot of people do really well in this space, and we've seen a lot of people get in and then get out very quickly, right? And either from a headaches perspective, or they didn't make the profit that they wanted. I think you just have to have a certain level of pain tolerance or thick skin, right? You've got to learn your lessons, and just because you don't make the $100,000 on the first one, you only made 20 or 30, doesn't mean you didn't learn a ton of lessons in that process, and you can't audit your process and get better. And I think that's the big takeaway for me as a business owner is everything that we do, we'll do a back end debrief of, hey, what happened on this project? Did it go well? Did it not go well? I literally keep a list of mistakes on my projects. And as these headaches pop up, I'll just write it in the document and I'll save it for when this thing is done in 2-3 months. But that allows us to then audit these projects and say, hey, listen, how do we create a system to where this never happens again? Right. So for example, I had to sue my contractor on my very first fix and flip because, we had a project that just nothing was getting done. Everything kept getting delayed. Didn't matter how much I poked, prodded, called, begged, nothing was getting done. And I had to serve a demand letter for him to take me seriously because I had no leverage. And that was my first project. So I didn't have a real contract in place. And even if I did have a real contract, there were still specific criteria we built over the years that say, hey, listen, in this environment, in this working relationship, you're going to have to do X, Y, and Z. And so we set very, 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 very clear expectations now so that these projects get done on time and we have real leverage. Like, I'm not just stomping my feet up and down and saying, oh, please, would you maybe show up today, Mr. Contractor? No, like there's repercussions. So for me, it's just been, how do you build in little things, little tools, little schedules, little contracts to fix all these issues, and just do an audit as you're going through, and actually spend the time to do it rather than just, oh yeah, I'll remember that next time. No, you've got to really make sure that it gets done no matter what, in a checklist or something of some sort.
Yeah, and Jason, I'm sure you would agree that real estate investing isn't for everyone. So I'm curious, what is the roadmap or questions people should ask themselves before getting into the field full time, my friend? What are your thoughts there?
It's a tough question. On one hand, I want to say real estate is for everyone, right? Because I think it is the benchmark of America, right? Like, this is how our economy's been built, and there's entire economies and countries that have tried to copy our housing model, period, right? To prop up their own economies, which is a phenomenal compliment to us, and really just points at the amount of opportunity in real estate in America in general, if you can get in on those first projects. But to your point, like, we're building a business model here, right? And there are skill sets that you need to have in order to be successful. And so when I, talk to students in a real one-on-one way, it's like, hey, listen, we may have these few skills, but we also may have some of these gaps, and we need to understand that, like, we got to go actually build those gaps. Otherwise we might not be successful. So personally, I think, having the ability, having sales skill is really, really important, because the way you talk to a contractor, the way you talk to a hard money lender, the way you talk to an investor in your business, they're all going to be completely different, and you're selling yourself in each environment. So that is extremely important. I do think people skills and stress management skills are really, really important. Things are not going to go your way 100% of the time. How do you maintain and build relationships when things are not going correct or not going the way that you'd like? And there's a lot of money on the line, right? The other two is just absolute ownership. You own this business. Nobody else is going to have the same level of care, concern, urgency as you are going to have. And so you need to take absolute ownership of every mistake. If it's a contractor mistake, it's your mistake. If it's a lender mistake, it's your mistake. If it was a comping mistake on coming up with these properties and evaluating them incorrectly, it's your mistake, because you have to evaluate these things in a way for your business to be successful and not rely on somebody else for the success of your business, right? So taking absolute ownership, having a massive amount of urgency to where things need to get done right now, and we need to solve it right now. These are the things that really separate, I would say, the top performers from maybe the bottom 80% in this space.
Yeah, absolutely. Now, Jason, as an old journalist, I know that you use creative storytelling along with data and analytic approaches to invest into certain properties over the other, and also to build brands and just tell stories. So tell me how creative storytelling has become a competitive advantage for you in your business, my friend.
Yeah, there's this book. It's called Lead with a Story, and I've always admired, like the older generation that can sit around a campfire and just captivate, their grandkids, at that campfire, and they just, like, are starry eyed, and And whether the story is embellished or not, like it's an absolute skill. And this is something that I've learned and I've studied. And you look at the psychology of people, and I've worked with Olympic athletes in my athletic career and Olympic coaches, and so the psychology of what motivates people. How do people practically take in information? What makes a difference for people, and how to get to them to emotionally move along in a given process? And for us, that's a sales process. Whether it's we're buying a home from somebody, we're helping them list a home, whatever that case may be. That's what's going to separate your business in a lot of the situations. Like we talk about competitive advantages and what separates us as a listing agent from somebody else. That's it right there. Like, how do you create emotion? It's through storytelling. How do you create a situation where somebody's going to relate to what you're talking about? It's through storytelling, right? How do you give somebody confidence in your ability to perform? It's relational storytelling of this is what happened to me. And it is 100% adjacent for them to just pick this example and the story that you just told them and apply it to their own life. Right. And so whether, again, that's on listing a property or talking about mentorship or, many of the case studies that we have, it's just an absolute must. And it's what humanizes our product and our business and what really connects us to the customer.
Yeah, absolutely. And we've talked a lot today about instant equity or immediate equity, and you've talked about how it works from a real estate perspective. But I'm also curious to ask you about instant equity from a resilience perspective in business and building resilient mindsets and how that can bring instant equity as a business owner, in your opinion. What are your thoughts there, my friend?
Well, I think it's super interesting. If I'm getting at the heart of your question, like how do we build and maintain instant equity in a business? And for me, the way that I think about that is there's a lot of different businesses that are structured in ways where they have to have either a product with a ton of money up front built into inventory in that product, or it's a business that has to scale to a very large degree to be profitable. And I see a lot of people that come into businesses like that or have this traditional mindset of the business has to look like that, right? Has to have a product, and then we raise money, and then we bring in these venture capitalists, and then we give up equity in our company, and then we go scale from there. And I just see that as so risky and damaging to so many potential entrepreneurs that could be successful in the space. We've done the exact opposite, where we just started with finding something that had product market fit. The past experience, I've been in sales for a while. I've been in engineering for a while. I worked for a company that did engineering services, and their entire business model was, hey, we have staff of expert product, expert engineers that are experts in particular fields, and we can help people build their early stage R&D teams or build their early stage product lines out. So we worked with startups and Fortune 500 companies in that space. But man, it was really hard to sell that product. People, you had to be an expert in all these different fields, like PhD level expert. Number one, very difficult to find salespeople that can be successful in that space. Number two, you had a product where people wanted to hold that in-house. Like they wanted to build their own internal staff and capability and intellectual property. And so it was really hard to build that business and build that momentum. And the point that I'm getting at is this: that was like pushing a rope from a sales perspective. Translate that over to real estate, where we start selling homes, we start wholesaling properties to investors, we start raising capital to do fix and flips where we can make $100K in 4 months and give our investors back a 15% return in 4 months. And that's 52% annualized year over year. That was extremely easy to sell. Everybody's familiar with real estate. They bought homes for themselves in the past, or maybe they had 1 or 2 long-term rentals over their career. They're confident in it. And it was like, man, we did our first flip. We raised 400-500 grand immediately after. The product market fit was there immediately, right? So I would encourage a lot of entrepreneurs, if you're looking at like, how do I build a business that's scalable, that's repeatable, that's not super risky, like find something that has product market fit initially, whatever that product is, whether it's a service business, whether it's an AI business, whether it's sales, whether it's whatever. And the measurement stick for me there is if you can get the word of mouth pick up on its own, you're not spending marketing dollars, you're not spending overhead, you're not doing any of that. You're selling your product yourself direct to the customer, to the consumer, and then it starts to spread with word of mouth. That is the ultimate definition of I've got product market fit. This is working. Therefore, now I've actually started to generate margins and money. And that I can then take and spend in my marketing budget if I want, or start building out other products. Not, hey, I've got this idea, I've got this product's unproven, I don't know if it's going to sell, or maybe it sells a little bit, but I've got to go raise $10 million, give away 50% equity, and maybe it all works, right? Which is what I see a lot of the traditional entrepreneurship model be. So I'd much prefer people to do a little bit of the legwork themselves, be the salesperson themselves, sell it direct to the consumer for a while, have a good margin in there, start to save up that money, and then launch your business from that avenue. That's what we did. We're still 100% owners of our business. We're on track to do $3 million this year, and we've been doubling our income every single year. So it's been a slow build over 5 years, but now the next 5 years are going to be a massive jump for us.
Yeah, it's important to be invested in the process, isn't it? From a personal perspective, isn't it?
You can't skip it. There's no shortcuts.
Yeah, absolutely. Jason, I'm curious to get your thoughts on this finding from the Pennsylvania Association of Realtors that put out a study this year that found that between 87 and 96% of first-time investors initially get into real estate investing and flipping to build financial freedom, my friend. So I'm curious, what do you think of those numbers? What immediate thoughts come to mind? And what does it mean to be a successful first-time flipper in today's modern real estate market? What are your thoughts there, my friend?
I think it's a great statistic, right? That's why I got into real estate, like to build financial freedom, whatever that means, right? So I think, you have to have a very good definition and understanding for yourself of what is financial freedom, what is wealth. I always define wealth with my students of like, if you have to come back to work, no matter what length of time it is, whether it's 6 months, whether it's a year, whether it's 5 years, then are you truly wealthy, right? And don't get it wrong. Like fix and flipping is time for money, but you can still be on vacation and be successful doing fix and flips. And so, for me personally, I define wealth in that category, but then I also say, hey, listen, we track our net worth day in and day out. This is something that I've learned through a few books that I've read, and it's just made a huge difference in my life. Of the top wealthiest 1% of people are asking the question, how do I increase my net worth this quarter, this year, this month, and what decisions am I going to make that help me along to that end, right? And you can't answer that question if you're not tracking it. So like I use a net worth tracking document that both tells me my instant net worth right now, but tracks it over a period of time and says like, are we making good decisions for this? Are we picking up properties that are helping us with this? Or are we, stuck in a loop right now? So I think, getting really clear on what your goals are, getting tools that'll then help you track your goals. I'm very big on like, if it's out of sight, it's out of mind. If it's not in front of me, I'm not paying attention to it. So if I have a tool that I can reference consistently, that's really going to make a huge difference for me and how I make my decisions and how I prioritize certain investments. And so I think a lot of people maybe get into real estate investing, don't have that long-term mindset. They think like, maybe I'll take up a long-term rental and it'll, create me some cash flow. And I think that's where people get pulled into poor investment strategies. For example, you buy a long-term rental, it's 500 grand, you got to put 20% down. That's 100K, 100 and whatever that number is, 150K down. That's a massive amount of your liquidity that you have to put down into that property. And you're committed to that investment for 3-4 years before you can do anything with it. Like maybe it appreciates enough during that time frame to then be able to pull out money like a HELOC or something and go buy another one. But that's a pretty slow build. So if your priority is build net worth and that was the outcome. Did you really succeed there? So I think, understanding the long-term implications of particular strategies are really important. That's why fix and flipping is so powerful. But to answer your other question of what makes a successful fix and flip, for me, it's, number one, did we sell the property and did we make a profit? Yes. That would be checkbox number one. But we have very specific criteria of I want to make at least 80% return on my investment. So if it's 120K cash out of pocket, to do this hard money loan and get this thing under contract and secure the construction loan for this, then I want to make 100 grand on the back end of this deal, right? Mm-hmm. Otherwise, I can probably find better deals. And so I see a lot of fix and flippers get started trying to make 20, 30, 40 grand because that feels like a big difference for their lives. I can assure you almost anybody out there nationally can make 100K per fix and flip. If they do it the right way, they buy it the right way. And I think that you have to, because if you're not building in that type of margin, and something goes wrong and you only had 20 grand of margin in there, it could be very easy for you to lose money on a project if you are too thin on those margins.
Yeah, and I want to talk to you about relationship building, because I know one of your main goals is to help everyday investors participate in opportunities that often attract multi-million-dollar hedge fund, institutional capital. So I'm curious to ask you about why you're committed to this goal, your sort of approach to relationship building, and how building relationships makes this particular goal more attainable for everyday investors. What are your thoughts there, my friend?
Well, I think you just got to look at what are the biggest hurdles to getting started, right? Most investors that are trying to fix and flip properties, the first one's always the hardest. And one of the biggest hurdles there is how do I raise capital, right? So if we're talking about, how do we create an ecosystem where people can be successful? Well, that ecosystem includes the best hard money lenders in the country. And that ecosystem also includes potentially private investors who know our system, know that we have a lot of oversight and hand-holding going on here to where our students are going to be successful, even if they're first-time fix and flippers. And so now we can create kind of the front end and the back end of the financing of how do we help people raise capital up front, and can they work with our partners on that side of it? And then how do we help them, transition into these construction loans so that they can actually do these projects at scale, and they don't just, go through the theory of learning all of this content, and then they can't actually execute on the financial side of things. And so we've had people, with $5 grand that they borrowed from their aunt go through this program. And we've had people worth $2-3 million come through this program. And each one of those people have been able to be successful and do well in this environment. But, that is the real benefit to the students. And we have to have those long-term relationships with those lenders as well. And there's got to be benefit for the lenders. So that's kind of the question that we're asking ourselves constantly is what value can we add? But this mentorship program, with the volume that we do, is extremely valuable to those lenders. How much more volume can they get done in a trusted environment where people are succeeding and they're not taking risks on new flippers that they don't know, because they know that we have these people's backs, right? So I think it's a win-win for all parties, honestly, on both sides of the coin here.
Yeah, Jason, I'm curious to get your thoughts on these findings from CNBC that reported earlier this year that, in fact, first, real estate investors have purchased 1/3 of all single-family homes sold during the second quarter of 2025, which is up from 27% in the first quarter, making it the highest share in 5 years. At the same time, my friend, institutional investors are also seeing, continual growth for the sixth consecutive quarter. So how do you balance, real estate diversity, I guess is the question, of making sure that everyone that's interested in getting a slice of this pie is able to do that. What are your thoughts there, my friend?
Yeah, I think it's kind of natural evolution, right? And this is going to be a weird concept to talk about for a second, but when you start a company and like you're in a brand new space, everybody talks about like this blue ocean opportunity, meaning like Uber had this blue ocean opportunity when they started their company because this could go international, this could go global, and it's unlimited funds, unlimited opportunity, unlimited market share. The market's not even defined, right? America is only 250 years old, or however many years old it is. It is a developing nation, quote unquote, compared to the rest of the world where these institutions have been in place for years and years and years and years. And so, from my perspective, from like a raw materials and an economic development perspective, America is still very blue ocean, right? And so when we talk about like the American dream, building wealth with relative little ease, that was the 1920s through 1940s, in my opinion. And we're starting to phase out of that. We're maturing as a company or as a country, and the housing market is maturing out of maybe that initial American dream housing market as well. And that's where we're starting to get these extremes. So we're starting to see, the government take steps to limit investor involvement, which I think is wise. At this large scale, there's a lot of investors that failed in 2021, et cetera. Like Zillow's entire home flipping department, I think, lost $800 million and they shut the whole division down because they were trying to buy at scale with institutional capital and using their own, Zillow's estimates, which were garbage. And so they had no experience. They scaled too quickly and they couldn't succeed. So they fell out. So some of this is going to happen via natural selection. Some of it's going to happen via regulation. I think the regulation is wise, but I think what we're seeing is like the regulation's getting more. We just passed these housing bills to prevent this from happening with institutional investors. Yet the statistics are going up of institutional investors are buying a larger portion of most of the homes that are on the market right now. Why is that happening? Well, that's going to continue to happen. And we just got to take it in context, honestly, because what's happening is the investors are buying the homes that your traditional single family home buyers are not going to want. They're not going to be able to perform on. They don't want homes that are beat up, that are in foreclosure, that are hoarder houses, that are not financeable, that are not insurable, that have structural damage, that have floors missing, that can't pass an FHA inspection, that can't pass any of these things, right? And so while the traditional single family home buyer continues to reduce in activity because the affordability is an issue, investors have no choice. This is their lifeblood. This is how they make money, right? They have to continue to buy. So even if they stay steady at 300 million homes a year, I don't know what the number is. Let's call it investors buy $3 million a year or 3 million homes a year in the US. If the single family home buyer is reducing and we're staying steady as investors at this level, we're going to be buying a disproportionately larger amount of the inventory in the space. We also have to be successful and feed our family, so our volume can't decrease. So I think it's a misleading statistic, honestly. And I think when we talk about like, does it really matter? Probably not, because the types of homes that the investors are buying are homes that, are not financeable via traditional means, or are homes that otherwise would sit on the market for extremely long periods of time because a traditional home buyer isn't going to invest $200,000 in a remodel to fix up this type of a property. So that's what I'm seeing, for most of these investment homes and investment properties. But I don't think it's affecting where the main sweet spot is for the traditional home buyer right now, from the statistics that I've seen.
Yeah, and I'm going to combine my next two questions because they're interconnected. And I'm curious to ask you about the whole concept of building systems because you've talked openly about turning small stars into serious momentum by building systems instead of chasing deals and capital from an equity and ethical seeking lens. And you say that those lessons in real estate can apply to life and other areas of entrepreneurship. And I'm wondering why you believe building systems and finding ethical ways of living and conducting life can also lead to prosperity in other areas. What are your thoughts there, my friend?
Yeah, I think success is a formula, whether it's flipping homes and systematizing that or entrepreneurship and systematizing that. And I think there's this growing gap where everybody, I continue to see people say, scaling is for the select few. Yeah, I mean, it is. I mean, I've seen entire networking groups start with the concept of closer, not more, which is like closer to my targets, not necessarily growing this massive business. And that's because growing a business is really painful. And not everybody is built to do that. One from a pain tolerance perspective, but really from like a systems perspective, because a lot of people make the same mistake over and over and over again. And that's the difference between successful business owners and successful flippers and successful anybody in anything compared to people that are improving. You look at sports. How coachable are you? How quickly are you to change your technique if something's not working so that you can run faster, jump higher, do X, Y, and Z, right? That's extremely important in the concepts of sports is continuous improvement at the highest velocity possible to improve as quickly as possible. It's the same concept with entrepreneurship, as well. And so I think having the ability to think in a systems mindset allows you to build out SOPs. It allows you to build out mistakes. It allows you to pivot from emotional decisions that you made that are no longer serving you. Where, hey, I thought we were going to go build this type of a business and I invested 6 months and $80,000 to do that. And the market shifted and oh shit, like realistically, if I'm honest with myself, we need to pivot our business away from this into something else. And the people that can't do that, like they're either going to make the same mistakes or their businesses are going to struggle and flounder. And so I think that is a critical component to any of this. And along with that can come integrity because, you're making consistent progress when the big business is profitable. You can treat people right. And I think people get into this grind and then they get into this desperation mode of like things aren't quite working or I've just got to make as much as possible. So they just work harder. And rather than prioritizing the long-term relationships with clients, people that are buying your investment properties, if you're a wholesaler, listen up, right? Mentees, anybody as an end client in real estate, like you have to have their best interest in mind because they could buy 10 from you or they could just buy one. And I think a lot of people get in this mindset of grind, 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 make as much money off of this one particular deal as possible because their deal flow stinks or their systems stink or they're very inconsistent. And then they, wind up burning a relationship because it's very clear that you're just in it for the profit. You're not in it for the person. And so when you can think systems, when you can think scaling, when you can think consistency, when you can think volume, the thought process changes and the where you place your value changes. And that becomes fun because then your business partners become your best friends.
Yeah, absolutely. And Jason, I've got two questions left for you. And the first of those two questions is this, my friend. So I don't know how much research you did on me before our conversation, but I was born with what's called spastic quadriplegia cerebral palsy. It simply means that I don't have enough oxygen in my legs to walk. Normally, at the age of 9, Jason, I found out that I wouldn't be able to walk for the duration of my life because of the severity of my cerebral palsy. But I always say that everyone's portrait of success is different, and I know that you, when you first started out your entrepreneurial journey, my friend, I knew it wasn't all a bed of roses. You were leaving a job while still working a full-time job and doing this on the side. So I'm curious to ask you about perseverance and the resilience it took and the discipline it took to be successful, and your thoughts on resilience and perseverance as business principles, my friend. What are your thoughts there?
I think that's that X factor period, right? Like a lot of people have it or they don't, but it is a muscle, and I think either you can build it when you're young through sports, through adversity, through how you approach your schooling, through how your parents brought you up, through sometimes trauma that shapes how you're gonna, attack the world and where you get your meaning from life, right? A lot of entrepreneurs are broken. A lot of entrepreneurs are missing something. They don't have a secret sauce. They're missing something, which is usually that off button. And it usually comes from a deep gap of having to accomplish or achieve or do something to get value, or be perceived as valuable in their life. It can also come from a great place, right? And this is a super fun topic for me. Like, this is the soft side of things that, like, when we talk about successful individuals, these are people that just are relentless and they're optimistic and they're positive and they're like, this is going to work no matter what. And I have so much delusional confidence in myself that I'm not going to allow the thought of failure to enter my brain, right? And so that's, by the way, that's the category I fall into. Is I was able to be that obnoxious 7-year-old that thought he knew everything and just be ultra confident in myself, to where that played over and spilled over into my adult life and my professional life. And it creates so many opportunities for you when you're not afraid to raise your hand and be embarrassed by asking a dumb question because you're in earnest just trying to learn, and who cares what anybody else thinks, right? So, from a resiliency perspective, like, there's just gonna be thing after thing that gets thrown at you. And if you have a problem solving mindset and you're like, all right, I'm just going to dig in and I'm going to fix it, I'm going to solve it right now, we're going to figure it out, and you have the urgency and the positivity, it's going to change your life. You're going to get over these little things. But it is a weird place to live. Like, you've got this business that you don't know if it's going to work or it's not. If you build it the way that I suggested earlier, where you're selling direct and you have no overhead and you have no marketing spend, that is so much more confidence building for you because you know that this is working and it's producing revenue, right? So it's less of like, I've got this product and I don't know if it's going to work and I'm investing a ton of capital and I could just go bankrupt, right? So that eliminates a lot of the question marks and fear. But at the same time, like, it's just constant, right? Like, I don't know that I've talked about this before or not, but we had early on in our business, probably 2 years into our business, where we just started bringing on staff. And, we talked about our income doubled every year, but I had about $250,000 stolen from us. My wife was pregnant. We just moved into a new house and taken on a new mortgage. And it was like, oh crap, what do we do? Right. And
Mhm.
so, there's tons of situations like that. And I see a ton of entrepreneurs mirror those experiences for themselves as well, where there's been fraud or stolen funds or, on the edge of bankruptcy. And it's just, I think, an unwavering belief in yourself. And the commitment to problem solving of, like, everything in life is figure outable, right? Nothing is overcomplicated. It may seem impossible up here, but it all breaks down into little tiny bits and pieces. And so if you just, practically don't let yourself get overwhelmed and just focus on the little tasks, it's going to serve you really, 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 really well. Having a partner, a wife, whoever your significant other is, that believes in what you're doing, who is also optimistic and positive, man, that doesn't come easy. You got to earn that. You got to earn the financial respect to be able to manage those funds independently and invest and put those things on the line. But, fellas, if you're a husband out there and you're like, man, how do I get my wife on board with that? You got to earn it. You got to make wise financial decisions. You got to go out there and invest for a little bit and start saving some money away and show that there's, like, here's this pathway to, like, real difference in our lives. And then eventually she's going to trust you with more and more and more of that pie, and you guys can go after bigger. And now I'm spending, $1 million a year, and everybody is 100% trusting in my decision making, right? So all of that adds up into, what makes up a successful entrepreneur. But I think ultimately, like, confidence in yourself and the ability to break things down into small pieces are a huge part of it.
Yeah, additional, I'm curious to end on this note, my friend. I'm curious to get your perspective on how we can build more accessible housing for people with disabilities. And then, secondarily, I'm curious, how do you want your own personal and professional legacy to be viewed or remembered? And if I asked you to write the first line of your eulogy, my friend, what do you want people to remember most about you, my friend?
All right, I'm going to try to remember all of that in one question, so I might ask you to remind me. But from an accessibility perspective, um, I think it's interesting. Like, there's got to be a total addressable market. There obviously is. Um, you know, it's an interesting question. I guess I would turn it around for you and say, hey, listen, from what you see in the housing market right now, like what are the gaps and deficiencies that you see from an accessibility perspective, and how does that affect your ability when you look at homes, to whether or not this is a good fit for you?
Well, first and foremost, I'll tell you that I sit on the board of directors for Habitat for Humanity in my hometown. So I have a little bit of a professional and personal lens to this. So the first thing I would tell you is that the demand has to be equal to the supply. Oftentimes, if you don't have to build accessible housing, people don't build them, right? So we have to, first of all, get people with disabilities employable so that they can enter the market of buying a home. But I think that we have to better educate builders and real estate agents on the importance of building accessible homes, and then creating a pathway financially for people with disabilities to buy and purchase homes. And after that, it's just about supply and demand, like everything else in business. So I hope that it gives you some direction to answer the
I think it
question.
does. I think it does. And from the builder's perspective, right? Like when we look at spec homes, because we've done fix and flips, we've done spec homes, we've done custom builds, we've done bigger projects. We get to look at like the builder is looking for the mass market and the lowest risk because they've got a lot of money on the line, right? And it could go very poorly. So I think if there are channels, like I know, with government agencies, there's a lot of like bidding processes out there to where you can go and the government bids it out to a lot of these private industries, and it's just there's an open rec available. So if there was a platform for to match people with disabilities to home builders, I think that would actually go a really, really, really long way. Because me personally, like as a spec home builder, if I knew I had an end buyer who, you know, needed or who was ready to go, then it de-risks the entire thing for me, right? So yeah, I'll put in an elevator, or I'll change the entryway, or I'll change how the floor plan and the design all works to make it more efficient for you, or we'll do custom kitchens to kind of bring countertop levels lower, or from all these different perspectives to make it a usable, livable, great space for the end buyer. There's no way I could ever do that if I didn't have an addressable market, or if I didn't have somebody lined up with financing ready to go. So if there is a financial path from an employment or a subsidies or a government loan program, I think that would be a great start on the front end, and the back end is connecting them to the builders so that everybody wins in this space, right? It de-risks the builder dramatically, to where now they can customize these things, and then it kind of is a win-win on both sides of the coin.
Yeah, and then just finally about your legacy, my friend. How do you want to be remembered?
My ego will say one thing, and my faith will say another.
Sure.
I want to be remembered as somebody that makes a difference for people. That really, if I've spent the hard work and time and effort in my own life, that I can be somebody people can rely on and learn from, and hopefully make a big difference in their lives to where they can truly enjoy the life that they want to live. And I want to point people to Jesus in that space as well. So, my mind points to legacy. Have I made a real difference? Have I done something big that makes a real difference, that outlasts me, that provides for my family and my kids, but that gives future generations to jump off from and create systems and wealth for themselves and really make a difference in their own lives.
Yeah, absolutely. And finally, Jason, tell me if people want to get connected with Better Blueprint Realty or yourself personally, what's the best way they can do that, my friend?
Yeah, I think the easiest way to find us is betterblueprintacademy.com for anything mentorship related, and then betterblueprintrealty.com for anything brokerage and fix and flipping related. Those are the two easiest places people can go to the contact us page and just reach out to me directly.
Well, fabulous, my friend. I really enjoyed our conversation about diversifying real estate to create more accessible pathways for traditional investors. I think you're doing great work in the space. It was an honor to meet you, my friend, and I want to thank you for engaging in conversation with me this afternoon. It's most appreciated.
Kevin, it's been awesome. Great questions. Really appreciate you, and good luck with the show.